And Trish, educate us on all things taxes, please.
Okay, well, thank you everyone for joining. I will say right off the bat, since this is being recorded, I am not an accountant, and I don't pretend to play one on TV or on Facebook, but I do pay attention to the group where all of my information has been gathered from, which is Dee Dee Stone's Young Living Taxes and More group. And I know I've put the link to her group. I think I've put the link, or at least put the name of her group, in the event. And she also has a class next Tuesday night that she's going to do, which will also be recorded, and then also has ongoing stuff behind that. But I'll talk about that a little bit more at the end. So that's where I've gathered all my information. So if you have any questions, please speak up. And if you have something really specific that we're not able to answer, make sure you either reach out to your own tax specialist or get Dee Dee's book, because that's the main one that I'm getting it from. So the first big thing that everybody seems to question when they come to her group is, do I have income? Did I get a 1099 from Young Living? Do I really have to report this money that they've given to me? And the answer is yes, you should report all your income to the IRS. As far as the IRS is concerned, all income should be reported. So I'm just going to say that out loud. Black and white. I'm very black and white when it comes to things like that. And even if you never make over $25 a month, and so you never actually receive a paycheck, but you receive account credits, that is still income. And you should always go by, especially if you make under $600, because $600 is the threshold where Young Living will now send you a 1099. If you make under $600, you should go into your virtual office, to your account, to your commissions, and add up your total income on your commissions. And so most of us know we have our commissions, but then if you make over $25, they have a commission adjustment that is taken out of your income. So that is actually, when you actually claim as a business, that is actually an expense that you can deduct from your income. So that's the first thing. So if you're receiving money, you should report it to the IRS. If the next big question is, do I have a hobby or do I have a business? And just because you've earned money, well, maybe you don't think of yourself as having a business. And so the difference between all that is your intent. Was your intent to work it as a business? Or was your intent to not work it as a business, just kind of, if people signed up or if people ordered, then yay, and you just kind of let it go. So I'm going to go over a few little things about that. If your intent was not to work it as a business, just hobby. So this is what is considered hobby income. And with hobby income, it's really just like it was money you earned kind of free without really working at it. And so hobby income is reported just like any miscellaneous income. I use TurboTax. So within TurboTax, it's under like less common income. And then there's eventually a spot for hobby income. With hobby income, it really is just that amount added to your already W-2 wages. So it just increases the amount of income you've earned for the year. If you are filing as a hobby, you cannot claim any business expenses. Okay, so that's usually a big defining thing for most people. So hobby income, it's just income that's added to your baseline, and you don't claim any expenses. If you do work Young Living as a business, then you can claim your business expenses. Now, one thing with Dee Dee is Dee Dee Stone. She is a former IRS auditor, and she did work specifically with cottage home industries. So she knows a lot about the allowed deductions for home businesses, which is very beneficial to us. And she shares all this information with us for free. So she's really great. With your business deductions, the file that I uploaded to Jen's group was kind of a profit and loss statement. So you have commissions, you can just enter all those in there. And seeing your expenses against the income that you earned for the year. And so it tells you how much profit or how much loss you had for the year. So Dee Dee says that in order to avoid red flags from the IRS, which most of us want to do, is the first 2 years of your business it's usually acceptable to have a loss. But by the 3rd year, she highly suggests that you show a profit. And maybe that means that you just don't claim all your expenses for that year. But usually by the 3rd year, if you are not showing a profit, that can raise flags with the IRS as well. So she certainly wants us to try to minimize that potential. Some of the big categories that I'm looking at my notes, that she has on that profit and loss statement: advertising, commissions, income, commission adjustments, computers, internet, dues and subscriptions, those types of things. Those are all, most everything fits into those categories very well. She does suggest, what was it? If you have a service that you pay monthly for, like maybe Oily Tools or maybe a website that you're paying monthly for, that you record that expense under dues and subscriptions. Or if you've paid maybe an annual fee, you could just list that under computers and internet. So those are a few things. If you have a space in your house that you exclusively use to work your business, then you can claim a percentage of that space on your taxes for your home office. And those are based on percentages. If you happen to have 2 home businesses, like Maribel's a good example, potentially with her yoga versus Young Living, you want to be really careful about making sure that that for properly. And personally, because Maribel is silver and above, ideally she'd probably want to reach out to a true tax preparer, unless her husband's an accountant, and I happen to know he's not. So those are definitely some things that she'd want to take into account. So does anybody have a pot in their house that they use exclusively? No. Okay. All right. Ooh, Maribel asked a question. What did she say? Maribel. TurboTax business. Yep, that's right. TurboTax. That's the best one. Okay. Another question that comes up a lot with, oh, Nicole, you have a room. So you just want to make sure you work with your accountant to know what percentage that space in your house is of your total house, because you can claim a percentage of, I believe, your mortgage, homeowners insurance, utilities, those types of things. So, I didn't know you were an accountant, Nicole.
I'm not an accountant. Sorry. I was typing because my dog was barking, but I didn't want to ruin your video.
That's okay.
I am my own accountant. I am not an accountant, but
Gotcha.
I leverage TurboTax tools to help me make the determination. They've got a really cool and intuitive tools that help you decide, like what the size of your room is, so it determines the square footage and all of
Yes.
that good stuff.
Excellent. Excellent. Yes. So that's good. So as long as you're following their guidelines, then you should be golden. So
Yep.
that's it. All righty.
See, sorry.
That's okay. Another question that comes up a lot in Dee Dee's group is people say, oh, well, I have to spend $100 or 100 PV every month, so therefore I can deduct that. And the answer to that is no, you cannot always do that. If that 100 PV happened to be made up of your demo products or products that you are sampling out, then yes, you could deduct that 100 PV. But if I buy 100 PV worth of Ningxia and Super Bee, and it's just for me for personal use, then I cannot deduct that $100 per month. So she's got a great little video on her website about that. So that also brings us around to first-time purchases. So I know most of us probably heard as soon as we signed up and we got people underneath us, we're like, oh, you can write off all new products that you purchase. And that's true. The first time you purchase a product, you can write that off. And that means you can write off Ningxia the first time you buy it, but not the Ningxia 2-pack and then the 4-pack and then the 6-pack and the 8-pack. But there are stipulations around those new products. So those new products, you should, once you have that product, you should definitely focus on educating your downline or your group, whether it's in person or on social media, or do some classes or samples or something like that. So you do have to show that you have been, that you are using that product for more than just personal use. If you do have a product that you're using for personal use and for demos, like you have a bottle of lavender and half of it went to this make and take class and then the other half is for you, you'd want to, you'd want to use the percentage of the, 50% of the bottle of the cost, which includes the shipping and the tax. 50% of that went to the class, and 50% is your personal use. So that's how you write those things off. And for all of us who didn't know, YL Go and YL Go Plus, the shipping programs, those are deductible. So that's an expense that you can add into your profit and loss statement. Let's see. One really good thing that Dee Dee suggests is that, especially if you're trying new products and you're sampling those out, to make sure you maximize your monthly order with those types of products, because you want to pay for those out of your pocket. And then all the points that you earn with those, you then use those ER points to get your personal items, because you can only use as an expense those items that you've paid for. So if I placed my order, my ER order, and I have my points now loaded into my account, and I'm going to turn around and use those, if I choose at that point to buy a new product with my ER points, I haven't paid anything for it. Therefore, I cannot deduct that. So looking back on it, I probably shouldn't have done that for the feelings kit or ancient scriptures, or I was hoping to go buy Neroli, but apparently I was 25 cents shy of my ER total. So that'll have to wait till next month.
Hey, Trish,
Yes, ma'am.
can you repeat that? I didn't understand.
Okay, no,
Sorry.
that's fine. So let's say you're getting ready to have a class. Let's
Okay.
say maybe it's a makeup class. And so you're buying a bunch of makeup. You want to buy that either through your ER monthly order or on quick order. You want to actually spend money on that
Okay.
because it's all an expense.
Right.
So then if you did happen to buy it through your ER order, then
Okay.
your ER points are loaded into your account.
Right.
So then when you spend those ER points, you want to
Okay.
make sure you're spending those points on your personal items. The items
Okay.
that you and your
Gotcha.
family.
Gotcha. Okay. I got it. Thank you.
You're welcome. You're welcome. And truthfully, well, maybe not. One of the last big things I wanted to cover, because I know specifically, Maribel, with you, because you went to Silver Retreat last year. And so you should have received not only your 1099 from Young Living, you should have also received a letter from them that said what the cost of it was that was added to your income.
Mm-hmm.
Now, the one thing that seems to have come as a surprise to most of us is that the cost of that trip, you can then turn around and expense because it was a business meeting.
Right.
So it kind of zeroes each other out.
Yep. And I received a letter that had it even line item.
Yeah.
So it was so helpful. Mm-hmm.
Yes. Yeah. So you should be able to do that. So yes, if anybody's received a trip, I think Maribel, you're the only one in the group besides Jen who's received that, then you don't want to file your taxes until you receive that letter from Young Living. So one thing too, I don't know if anybody's planning on going on the Global Leadership Cruise in June, but yeah, in June. There's actually some interesting things around the cruises because usually cruises for business meetings, it's very hard to get those deducted. The cost of the cruise is hard to be deducted because most of those ships are not flagged in the United States. And that seems to be a key item when claiming that cost. So it's very interesting. So if anybody's planning on going on the Global Leadership Cruise in June up to Alaska, then make sure you talk to your tax accountant and get that taken care of. Or just know what you can expense and what you can't expense, because it's very hard to do that. Let's see. What was the other thing?
Tricia, can you talk about convention?
Yes. So convention, you can, that's where most of my expenses went this year. You can definitely expense that with your convention ticket because that is personal development. Your flights and or airfare, driving that I know Allie does, that is, those are deductible. And the hotel that you're there at. The one thing that's really specific, I thought I had written it down, eeks, I don't think I did, is food. So there is a per diem that is allowed per day that you're away at training. And if you're, so you need to look that up. I don't know why I don't have that one. I'll look that up. I'm going to take a note. per diem. So you cannot go crazy and go have $150 dinner every night. But, if Jen was taking us out to dinner and paying for a meal, she could do that. You do need to have receipts beyond for any meal with a team member beyond $75. So that's pretty specific. Let's see, what else about convention? I think that's it. Most of the stuff we buy there, we usually, it's team development, or it's just trying to find the categories. Let me see. The accounts. So class materials, demo products, gifts. You're allowed to gift items to your downline. You just need to document that, what it was and its value and who it's for. Let's see.
Do you know anything about clothing? Can that be considered, say we go teach a class and then we're wearing Young Living? Is that a uniform? Or
oh, yeah. Advertising.
Mm-hmm.
Somebody asked about that. So that is the one thing Dee Dee has stated, is that the category advertising is very, that's the one that's most watched by the IRS. So she does say, I'll have to go back and look it up, because I know that there have been posts about clothing, and she has said, you can certainly buy the clothes, but make sure that you have documentation of you wearing it and wearing it and wearing it and wearing it. So I'll come back and I'll make sure that I pass on that information. So, because it is important information. So yes, because I've, had a few shirts made and whatnot, but my expenses were more than my income this year. So that's just some of the stuff I chose not to claim. So a few of the other things, like iTovi, Project Broadcast, which is the texting, the YLDist, web pages, Oily Manager, Oily Tools, all of those types of expenses can go under dues and subscriptions. If anybody does a vendor event, the rent that you have to pay for the space, that or the fee, that goes under rent. Let's see, we got that. Anytime you purchase scripts or PowerPoints, anything to help you teach the class, that is class materials. And then anything that you purchase, maybe like for a make and take or to give away to those attending the class, those would be class supplies. And then talking about, writing off a percentage for your home office, or your cell phone, or your utilities at the house. So that's pretty much all the information I had. So I know I posted some information about, like I said, Dee Dee's group. I'll put in there the information too about the books that she has. And she also has a book about filing the Schedule C. It goes through like line by line to what to put on the Schedule C, which is what's for the business. So I think that's it. So what other questions do you guys have? What have I not covered for you that you've thought about? Anything? Everybody's muted, so unmute yourself if you're going to ask a question.
This was great, Trish. You answered every question I was going to ask you, so thank you. You read my mind.
Awesome.
And you did a great job.
Thank you.
Good to see you.
Thank
This
you.
was great, Trish. And I was curious. So, okay. So I have a separate yoga business. Meg, you might have a separate doggy business. And I'm wondering,
Yes.
okay, so Meg, for example, I think if you use oils on the dogs that you walk, or I wonder if teaching, could you write an invoice for what you purchased
Yes.
from one business to the other?
Yes. That's actually, somebody has mentioned that recently. Yeah, somebody mentioned that recently in Dee Dee's group and asked about that. And the way she suggested to do it is your yoga business buys the oils from your Young Living business. So that you then kind of, and maybe even have them separated if you can.
Yes,
Like
yes.
label them. This is for
Yes.
yoga. And
Yeah.
Meg could do the same thing. The dog business buys them from her yoga business or from her Young Living business, and those are separate.
So Meg's doggy business would invoice her YL business.
Yes.
Okay, and then same for me.
Or the YL business. The YL business invoices the yoga business or the doggy business so that they pay
Okay.
it.
Okay. Thank you.
Ooh.
Thank you,
Thank
Maribel.
you.
Did
Yep.
my internet go out? Okay. Is everybody good?
Mm-hmm.
That was
Yes.
a great class. I love
Okay.
it. Just everything I needed. Thank you.
So many things to think about.